Hey, what's up everyone? I'm Nicole, your expert on everything crypto in Asia. Welcome to our channel where we break down all things in crypto, DeFi, and blockchain so you can stay ahead of the game. If you love hearing about latest in Bitcoin, Ethereum, and all things decentralized, hit the like button and subscribe. Today we have got some major highlights coming out of Asia, everything from Bitcoin's layer 2 explosion to unfortunate scams and the struggles of crypto ETFs in the region. These stories are going to take us through the highs, the lows, and the surprising twists of crypto adoption in one of the world's most exciting markets. So without further ado, let's dive right in. Our first story takes us to one of the biggest developments for Bitcoin Layer 2 solutions, the launch of the Stacks Asia Foundation. Stacks, for those who don't know, is a leading platform that brings smart contracts and decentralized applications to Bitcoin, and how they are just made a major move into Asia with $50 million backing. Stacks is no small player. It's achieved over 1,400 monthly smart contract engagements, which is huge for Bitcoin. They are leading the charge in making Bitcoin more than just a store of value. They are pushing it into the world of decentralized finance or DeFi. The new foundation will focus on critical markets like Korea, Hong Kong, Singapore, and even Southeast Asia. These are regions that have shown a lot of promise for crypto, and Stacks is looking into deepen relationships with developers, infrastructure providers, and of course investors. One of the big names leading this effort is KLL. He's got a strong track record in building crypto projects and driving innovations in the space. This launch comes at a perfect time because Stacks is about to roll out their Nakamoto op, which will supercharge Bitcoin's transaction speeds and settlement times. This could push the Stacks ecosystem even further ahead in the DeFi space, and as you might expect, their STX token is already seeing gains up to 4% to be exact, with a market cap sitting at $2.4 billion. The indicators are bullish, and we might see more growth as the foundation kicks into the gear. And now, as we talk about crypto's expansion, it's important to also recognize that not all new is possible, and they bring us to the next story, a cautionary tale from China. Next story is a grim reminder that where there's a rapid growth in crypto, there are also scammers looking to take advantage of unsuspecting victims. There is a new crypto scam taking China by storm, and it's called point running. If you haven't heard of it yet, you will want to listen closely because it's costing people a lot of money. So here's how it works. Scammers convince people that they can earn commission by transferring cryptocurrencies through different accounts. Sounds easy, right? But in reality, these victims are acting as money moves, unknowingly laundering funds for criminal operations. The scammers initially lure victims with small profits to build trust. One case involved a guy named Wang who was promised high returns for transferring USDT. At first, Wang made a little money, enough to get hooked, but by the time he realized something was off, he has invested over $42,000. When he tried to cash out, his funds were gone, and so was his balance. And Chinese authorities have warned that these scams becoming more common as crypto becomes more mainstream. And unfortunately, some of these scams are tied to even worse activities, like money laundering and even kidnapping schemes. So while the crypto world opens up amazing opportunities, it's also important to stay vigilant. If something seems to be good to be true, it probably is. Stay safe, do your research, and never invest more than you can afford to lose, especially if you are unfamiliar with the platform or the person pitching you the deal. But with that in mind, let's pivot our final story, which highlights another side of crypto in Asia, this time in the world of exchange-traded funds or ETFs. For a while, it looked like Asia, particularly Hong Kong, was poised to become a major player in the crypto ETF space. After all, Hong Kong launched 6 spot crypto ETFs in quick succession, aiming to ride the wave of Bitcoin and Ethereum's success. But instead of skyrocketing, these ETFs have hit a wall, and it's not looking good. Let's break it down. Since their launch, Hong Kong's crypto ETFs have struggled to deliver positive returns. In fact, most of them have posted losses ranging from -5% to -20%. And doesn't stop there, trading volumes have also dropped, leading to a cycle of poor performance and low demand. What went wrong? Well, a big part of it is that Asian retail traders seem to prefer holding crypto directly rather than investing in ETFs. A survey in Taiwan showed that none of the respondents were interested in ETFs. preferring to own Bitcoin or Ethereum. Alright, meanwhile, in the US, crypto ETFs have been a hit, amassing big billions in assets under management. It seems like the market in Asia isn't quite ready for these products, and regulators might have overestimated the demand. It's a tough break for Hong Kong, which had high hopes of becoming the crypto hub of Asia. But as the ETF market flounders, it's clear that region has some catching up to do when it comes to integrating institutional and retail demand. So what can we take away from today's stories? Whether it's stock making or major moves in Asia, the dark underbelly of crypto scams, or the struggling ETF market, one thing is clear: Asia is a vital battleground for the future cryptocurrency. We are seeing incredible potential for the growth, but also serious challenges that need to be addressed, whether it's through education, better security, or smarter financial products. And thanks so much for watching, and as always, if you enjoyed this video, hit the like button, subscribe, and let me know in the comments what you think about crypto's future in Asia, and are we going to see a crypto revolution, or are these setbacks just part of growing pains? Stay tuned, and I will see you next time.